Hello everyone, I'm Payal Agarwal and today we'll discuss about carbon credits and its trading, laws and markets in India. So what are carbon credits? Carbon credits are basically credits generated out of the reductions of carbon dioxide and other greenhouse gases. So the concept evolved as a result of the growing problems of climatic change and global warming around the world. And carbon credits seem to offer a potential solution around these. Also, the sale of these credits can help you earn huge revenues. So that is also one motivation, which is the driving force behind the private sector growing conscious of and generating revenues by means of carbon credits. So today we try to understand what carbon credits are, what are the existing markets and regulations around carbon credits in India, what are the global carbon markets, the accounting and taxation aspects around the same, and the pros and cons of the carbon credit markets. Okay. So as we start, we understand that carbon credits are generated out of the concerns around the global climatic change and the global warming. These carbon credits have been given a legal recognition by the Kyoto Protocol as well as the Paris Agreement. Okay, so there have been a series of events which have resulted in the popularity of carbon credits around the world. Let us first understand what these carbon credits actually are. So as I said earlier, carbon credits are permits reflecting emission reductions, carbon dioxide and other equivalent greenhouse gases. One carbon credit gives you a right to offset 1 ton of carbon dioxide or other equivalent greenhouse gases. As I see this, we understand that emission reductions are intangible. You cannot see those, right? So to give them a visibility, to give them a tradability, carbon credits are issued in the form of a certificate or a permit. Okay. So let us understand how this works. So if you see this is a project A, which is an emission avoidance project, right? By the help of this project, I'll be able to generate carbon credits. Now these carbon credits I can use to retire against other high emission projects of mine, or I can simply trade it on carbon exchanges and earn revenues out of the same. Okay. So as I say this, we understand that the concept of carbon credits is not new to India. There are various Indian organizations which are already earning by way of generating carbon credits. Okay. So as I say that there are organizations which are earning by way of carbon credits, I would also like to put before you this fact that there are no regulations and no ready markets in India at present for the trading and generation of carbon credits. As I say this, I would also like to put before you the fact that there are certain regulatory developments proposed around India regarding the generation and sale of carbon credits. Okay, so let us see those one by one. The first is an MOU entered between the Gujarat government, EPIC India and JPAL, by which Gujarat is set to bring the first carbon trading market of India in Gujarat. Okay, so this will be based on a cap and trade model. What is the cap and trade model? A cap and trade model is basically a model in which a maximum level of permitted emissions are set as a cap. Okay, and within these caps, permits are issued to the organizations or participating companies. Now, these organizations or participating companies are free to trade their extra permits with those companies or organizations which fall short of their permits. That is to say that their emissions exceed the permits given to them. Okay. Next is the Energy Conservation Amendment Bill 2022. Okay. So this bill is proposed to be placed in the monsoon session of Parliament. And if you see news, it is already news that the national carbon trading market may be launched on 15 August 2022. Okay. So this Energy Conservation Amendment Bill seeks to provide regulatory framework for carbon trading in India. And by this bill, it is sought to provide additional incentives to private sector in the form of carbon credits so that their involvement or their participation in the climate actions are incentivized and therefore increased. Okay. One more regulatory development is the launch of International Sustainability Platform. Okay. So this platform will be launched as a part of the NSE IFSC, which is an international exchange in the GIFT City. This platform will facilitate the listing and trading of voluntary carbon among other sustainability products. Okay. The platform is not operational currently. Its commencement is pending certain regulatory approvals. So as I move on to the existing regulatory framework, as I've already said that there are none. Okay. So currently the issuance of carbon credits, registration of the projects, retirements of carbon credits or trading of these credits are not governed by any regulatory guidelines in India. Okay. But as I say this, I would also like to mention this, that there are certain regulations in India which do not relate to carbon credits, but works on the model similar to that of carbon credits. Okay. So we'll briefly discuss about those. First, we begin with RECs or Renewable Energy Certificates. As the name itself suggests, Renewable Energy Certificates are certificates that promotes generation of electricity by way of renewable sources of energy. Okay. One REC is equals to 1 megawatt hour of energy. Okay. So as I see the legislative background behind the same, please note that the electricity distribution licensees are required to source a specific percentage of their total energy consumption by renewable sources of energy. Now, if they are not able to source it by way of renewable sources of energy, they can simply purchase renewable energy certificates from those electricity generators which are generating electricity by way of renewable sources of energy. So this is the brief procedure. There is a RE generator. If you see, this RE generator is a electricity generating company which is generating electricity by way of renewable sources of energy. Okay. Against this electricity generation, they are given renewable energy certificates, and these certificates they can sell off to distribution licenses on the power exchanges. So currently there are two power exchanges in India. One is the Power Exchange of India Limited and another is the Indian Energy Exchange Limited. Okay. So this is some data and pricing related to RECs. Next, we move on to the energy saving certificates under the PAT scheme. So it is Perform, Achieve and Trade scheme. And this scheme was implemented with the objective of reducing the total energy usage, okay, by way of a reward and penalty mechanism. So let us understand how this mechanism operates. So there are certain high energy intensive sectors which have been designated under this scheme. And within those sectors, the designated consumers are identified. These consumers are given specific energy consumption targets based on their base year consumption. Okay. And these DCs are required to reduce and measure their total energy consumption. Okay. Now, if the total energy consumption is within or below the limit of the targets fixed, then these DCs are issued energy saving certificates. And these certificates can be traded off to those DCs which have used energy beyond their specific energy consumption targets. Okay. This trading also happens in the on the power exchanges of India. Okay. And these are the various sectors which have been identified as and are covered under the PAT scheme. One more similar concept is that of the emission trading scheme on particulate matter. So what is this? This is a pilot scheme currently operating only in Surat, which puts a cap on the emission of the total particulate matter. Okay. So this emerged out of the problems of increasing air pollution in India. And the idea was first of all brought by the Ministry of EF, okay, in the year 2010. So this is how the whole process works, which is very similar to the other emission trading schemes. As I said earlier, there are companies in India which are generating carbon credits and selling those to earn revenues. However, there are no markets and regulations in India governing the same. So, as I say this, the next question comes that where are the Indian companies trading their carbon credits then? So, the answer is the global carbon markets. As we begin with the global carbon markets, I would first of all like to differentiate between the compliance markets and the voluntary markets. So as the name itself suggests, what is the difference? Sorry. Compliance markets are markets that arise out of the regulatory obligations. Okay. Whereas voluntary markets arise out of a corporation's own social responsibility or response to the market pressure and public opinion. So compliance markets are governed by the government or regulatory authorities, whereas voluntary markets are generally operated and regulated by the not-for-profit organizations. Okay, and there are various voluntary carbon standards around the same. Okay, today since there are various domestic compliance markets currently operating in the US or let's say China, Korea, etc. We will not discuss about the same. We will discuss about the international compliance market governed by the UNFCCC, which is the Clean Development Mechanism. Okay. So if you see the price and issuance trends in India, you'll see that the total volume of CDM is gradually decreasing and the total volume of VCM, that is voluntary carbon market credits, have increased during the recent years, starting from 2018. Okay. So as I say this, let us understand the difference between CDM and VCM. Okay. So under the CDM is a recognized market under the UNFCCC, and the recognition was given by the Kyoto Protocol, further ratified under the Paris Agreement. So only those countries which are party to the Kyoto Protocol or Paris Agreement can participate in the CDM, whereas the VCM is open to all. Okay. Under the CDM mechanism, approval of the host country is required, whereas no such regulatory approvals are required under the VCM. Okay. The project methodology is a bit robust and stringent in case of CDM, since only UNFCCC approved methodology can be used, whereas VCM gives an opportunity for the project participant to come up with other innovative methodologies so long as that is beneficial to the environment. Okay. Because of the robust process under the CDM, the rate of rejection is quite higher, whereas under the VCM it is quite low. Demand being high under CDM, the prices of credits are higher, whereas under VCM the supply of credits are rather higher and therefore the prices are low. Okay. So as I say this, we understand that CDM is something which is governed by the Kyoto Protocol, and there is a internationally recognized body, UNFCCC, around the same. But in case of voluntary markets, it is the carbon standards which governs the same. Okay. And there are various internationally recognized standards, voluntary carbon standards on the same, like the gold standard, the verified carbon standard, American Carbon Registry, Climate Action Reserve, etc. Okay. So now let us understand the procedure of issuance of carbon credits in the voluntary carbon market versus under the CDM. Okay. If you see, if there is a project participant which wants to get its project registered with a voluntary carbon market, let's say with Vera, then this project participant has to open an account with Vera and submit its draft project description. Vera will have a prelim view of that project description and will put it on their website to invite public comments. Okay. Now, there is a total period of 30 days for receipt of public comments. Once the public comments are received by the company will submit the final project description to an auditor. This auditor is an auditor registered with the Verification Validation Board of VERA. Okay, so this auditor will verify the project and submit the project validation to the project participant, basis which the project participant will be granted registration by the VERA. Okay. Now, as the project participant involves their funds in the project and get its activities done, it will also monitor and measure the total emission reductions that this project is generating. Okay. At the end of the project tenure, the monitoring report will be submitted to the auditor again, who will verify the same, and after verification, the company can apply for verification approval to VERA. Okay. Once VERA receives all the requisite documents, the credits will be issued to the project participant. Okay. Now, these credits can either be sold under a bilateral agreement by the project participant directly, or the project participant can take the services of any carbon trader, any carbon agency, and sell the same on the recognized carbon exchanges. Okay. So this is how the whole procedure of issuance of carbon credits under a voluntary carbon market operates. In case of CDM, the procedure is more or less similar. There are changes in the terminology, like the auditor is called as DOE, then the board is the CDM executive board, but the methodology is more or less the same. But the one key difference between the methodology under VCM versus under CDM is the approval requirement of the host country. Okay. So in case of CDM, if a company wants to register its project for earning of carbon credits, it is required to first obtain an approval of the host country and submit the same to the CDM executive board. Okay. So next we move on to the carbon credit pricing. And as you see, the pricing of carbon credits are more of a product-based pricing, depending upon various factors. Of course, since it is traded on carbon exchanges, it is also driven by the demand and supply mechanisms. But apart from the demand and supply mechanisms, there are various factors relevant for the fixation of prices of carbon credits. Okay. So as I say this, let us see what all are those factors. First is the type of project. What type of a project is this? So there can be a lot of types of projects. It can be a clean energy project. It can be energy conservation project. It can be agricultural based project. It can be technology driven project. So there can be various types of projects on the basis of which the pricing of carbon credits depend. Next comes the value of beyond carbon benefits. So if my project is able to earn me benefits beyond reduction of carbon dioxide, let's say for example, my project is that of an electric cook stove. Okay. So this electric cook stove can help in the reduction or avoidance of carbon dioxide emissions. At the same time, it can keep the air clean because smoke is not generated by the fossil fuels. Okay. It helps in conservation of non-renewable source of energy by avoiding the burning of fossil fuels. And it also provides kind of a safety to those who were earlier using the fossil fuel based cook stoves, since those are hazardous to health. Okay. So these are the beyond carbon benefits that my project of electric cook stoves is generating. Okay. Next comes the size of the project, because we understand the basis the size of the project, economies of scale can be utilized. The location of project also has an impact over the price fixation, since we understand that for projects which are located in highly developed countries, the prices would be rather high because the potential of generation of carbon credits is lower there, right? Next comes the objectives of purchaser. which is if the purchaser is purchasing it as a part of its compliance requirements, then he may not be willing to pay a higher price. But let's say if the purchaser is purchasing it on his own will for its corporate social responsibility, then the purchaser may be, the purchaser may be lenient enough to pay a higher price for purchase of carbon credits. The vintage of generated credits also matters, since the older the credits, the higher the prices. The methodology used for the project is important, since it places more reliability on the carbon credits generated. And next comes the quality of the project and the credits generated. Higher the quality, more the price of the credits. Okay. Now we move on to the accounting aspects of carbon credits. So for this purpose, I have divided the whole process into various parts. First is the course of the project, wherein I am doing the business as usual and also the accounting treatment as usual. Okay. Next comes the time when I have applied for the issuance of credits but not received the verification approval yet. Okay. So at this point of time, if you see, the credits are actually a contingent asset to me. Why so? Because it is being generated out of the past events of mine, the past project done by me. Okay. But its existence will be confirmed upon a future event, which is the receipt of the approval from the designated authority. And the approval is not completely within the control of the generating enterprise. And therefore, I can treat the same as a contingent asset in my books. Next, when the credits are finally issued, the same is recorded as an inventory, since these are self-generated and held for sale in the ordinary course of business. Okay. While I say that this is inventory, it has to be noted that this will be recognized as at the net realizable value or cost, whichever is lower. And if I talk about the cost of generation of carbon credits, the cost will mostly be the registration fees given with the designated authority and the auditor fees, etc. Because otherwise, most of the money involved in the process of generation of carbon credits is actually the money is actually the expenses done by me in the normal course of business as usual. Okay. And finally comes the sale of the credits. When the credits are finally sold, revenue is recognized in terms of AS9 and the profits are charged to the P&L account of the company as the business income. Okay. So as I say this, I would also like to put before you the fact that companies in India are generally directly booking the revenues from the sale of carbon credits in their books. And as I say this, I would also put before you the reason why. Okay. So in India, the whole process starting from the registration of the project till the retirement of the credits and selling it off in the carbon trading exchanges are generally done with the help of a carbon trader or a carbon broker in between. So this trader takes the responsibility of everything that has to be done apart from the project management. The project management is done by the company itself, whereas all other processes from the registration till the hiring of auditor, getting the verification approval, issuance of credits, retirement of the same, sale of the same on the carbon exchanges are done by the carbon traders. Okay. And the model generally works on a revenue sharing model. So the company at the end of the sale of carbon credits is just required to share the revenues arising out of the sale. So the carbon traders, let's say for example, the carbon traders have earned rupees 50 lakhs from the generation of carbon credits by the company and sale of the same. So as he said that this is a revenue sharing model, so there would be a fixed percentage. So let's say the percentage is such that 10% is kept by the traders, whereas the remaining 90% is given to the company. So basis that the treatment will be done and only revenues will be recognized at the end of the tenure when the sale of the credits is actually made and revenues are actually earned. Okay. Moving on to the taxation part, the taxability of carbon credits is currently governed by Section 115 BBG of the Income Tax Act 1961, which has been introduced by the Finance Act 2017. So if I talk about you regarding the taxability aspects, the same is taxable as capital gains at a flat rate of 10% without the allowance for deduction of any expenses on the generation of such credits. Okay. Before the insertion of the specific section on taxability of carbon credits, there have been certain rulings which has recognized that the sale of carbon credits are capital receipts and not revenue receipts, since these are generated as an offshoot of environmental concerns, not as an offshoot of the business of an organization. Okay. As I say this, I would also like to put before you that GST is also levied on the supply of carbon credits, and it has been clarified by the CBIC clarification dated 1st March 2018 that the same is a goods. Okay. Now, as I say this, please note that the CBIC clarification does not expressly use the term carbon credits. Rather, it is for priority sector lending certificates and renewable energy certificates. Since the nature of carbon credits are similar to that, therefore we understand that the same interpretation will follow. And the rate of GST is 12% on the same. But carbon credits, as we all know, are generally sold in the foreign markets and are purchased by the foreign companies and organizations, and therefore an export. And we know that exports are an exempt supply under the GST, and GST is not levied on the same. Moving on with the pros and cons of carbon credits. As we know that carbon credits, the concept has emerged out of the concerns around climatic change and global warming, right? And India is also a signatory to the Paris Agreement, having their own nationally determined contributions for the purpose of reaching carbon neutral status, net zero. So if the Indian companies are able to tap their potential of generating carbon credits, it also helps the country in the achievement of its climatic ambitions. Okay. The next benefit is emission reduction at the least possible cost, because the whole concept of carbon credits and carbon trading is based on the same. Had there been no possibility of reduction in the cost, that is if it would not have been a cost efficient approach to be taken, maybe the companies would have, each and every company would have their own low carbon projects for the purpose of reduction of emissions instead of the concept of trading the same. It also provides flexibility to the industries, because there might be industries which are high energy intensive and cannot cut upon their carbon utilization. So they can trade off their high emissions against the low emissions of other low carbon generating industries. It also promotes rural development in the sense that there are projects which are based on agri-forestry, or let's say on cottage industry, which can generally help the rural parts of our country also in earning revenues. Okay. It also has a potential for earning in foreign currency, since the carbon credits are generally sold outside India to the foreign markets. It is an avenue for responsible investing, since the projects as well as the company is sometimes environment friendly. These projects may also be taken as a part of CSR. And as we say this, we would also want to highlight this fact that if the projects are undertaken as a part of CSR, and from those project carbon credits are generated, these carbon credits should ideally be treated as a surplus generating out of CSR, and therefore should be redeployed in the CSR activities or projects of the company. We also know that there are listed companies which are required to provide a report on their sustainable activities under the business and business reporting and business responsibility and sustainability reporting. So if the company has potential for generation of carbon credits, then it may also create a positive impact on the BRSR reporting of the companies. Next, we move on to the limitations or issues faced by the carbon credits market. First is a very conceptual argument against the whole concept of carbon credits, which is that carbon credits, in essence, does not provide any real environmental benefit. The emissions, the high emissions of an organization can be traded off to the low emissions of another organization. Therefore, the high energy intensive industry is actually in effect doing nothing, taking no steps to reduce its carbon footprints. But we understand that the problem is global, right? The atmosphere is one. So even if the carbon reductions are happening in one part of the earth and the resultant higher emissions are happening in another part of the world, the net impact on the environment is what matters the most, right? The other problems primarily relate to the absence of proper regulations or inconsistent regulations around the carbon credit markets. So first is the problem of overcrediting, since it is difficult to presume the baseline upon which the total calculation of carbon credits survive, and the treatment may be different for different countries, for different projects, across different standards, right? There is a problem of double counting, since the net zero status is required to be attained by both the companies as well as the countries. Now, it might happen that there is a project in India which is being funded or financed by a company in USA. So that company in USA would want to claim these carbon credits on their accounts, whereas on a country basis, India would want to calculate these carbon credits in its account since it is generated by a project in India, right? So there lies the problem of double counting. Next is the difficulty in price fixation, since it depends upon a variety of factors and the expectations or importance given to each of the factors may be different for different buyers and sellers, right? So these are the various issues in the carbon credits markets as at present. However, the data shows that globally as well as in India, the carbon credit markets, especially the voluntary markets, are taking a lead, and it is expected that India has a very high potential of generating as well as earning revenues by way of sale of carbon credits, and it is currently being identified as the largest exporter of carbon credits, and there are studies which shows that India has a high potential of generating revenues by way of sale of carbon credits in the international markets. With this, we end our presentation here. Thank you.